This is Kitco News special coverage of the Future Minerals Forum.
Ahlan wa marhaban bikum. Hello and welcome to Kitco Mining's coverage of the Future Minerals Forum in Saudi Arabia with me, Paul Harris, here at the palatial King Abdul Aziz International Conference Center in Riyadh. Joining me this morning is someone I've wanted to interview for a long time. I have a master's in international relations, and my guest today has had a long career in the international sphere as a lawyer, as a member of the UK's Foreign and Commonwealth Office, as the UK's Foreign Secretary and Deputy Prime Minister, where he was responsible for negotiating the UK's exit from the European Union, and now as Head of Global Affairs of Appian Capital. Dominic Raab, welcome to Kitco.
Great to be here.
Now, we're going to talk about international politics quite a lot. I read this wonderful book over the holiday period, Helen Thompson's Disorder, Hard Times in the 21st Century, which goes into quite a lot of detail of explaining why we are sitting here today at a mining conference in Saudi Arabia. In the book, she speaks about the oil guarantee, the geopolitical and economic mechanisms that the major powers established to ensure stable access to oil, which drove a lot of the geopolitical strategies throughout the 20th century. And is now challenged by shifts in the energy geopolitics. And as part of this, Saudi Arabia is aligning more today with the BRICS countries and starting to sell oil in other countries other than the US dollar, and inviting the world into its country as it seeks to establish itself as a new pole for mining investment. With over 20,000 delegates here at FMF, it began yesterday with a ministerial roundtable where about 90 mining ministers gathered, the largest gathering of mining ministers ever. Dominic Raab, what is your feel of the vibe here at FMF, the Future Minerals Forum, and what it's trying to achieve?
Well, Paul, there's a lot in there, but huge geopolitical changes, certainly big changes since the Cold War, but also in terms of energy security. You mentioned oil and gas, and you think of the challenges over the last 20, 30 years dating back to the oil crisis in the 70s and the 80s. But actually today, if you look at concentration in the market, back today, oil and gas, the biggest producer is no more than 12, 15%. If you look at critical minerals, China has a domination of something close to 80% and upwards in a whole range of critical minerals and rare earths. So the concentration in the critical minerals space compared to oil and gas is even more acute than some of those more difficult times that you mentioned. In terms of Saudi Arabia's place in all of this, I think it's very interesting. Obviously, we've got a situation which isn't comparable to the Cold War, much more fragmented, much more multipolar. I think Saudi Arabia's got a big place in all of that, obviously a close ally to the United States, but also willing to deal with China and many other countries, and has quite a place, geopolitical place, within the so-called non-aligned group. So it's quite well placed, and it wants optionality. It's got huge resources here, significant, as well as oil and gas, obviously significant critical minerals and rare earths capacity, but also, I think this is interesting, a desire as part of Vision 2030, which the Crown Prince has set out, their economic plan for this decade and beyond, to try and get into the refining and processing space. And that is what I think the FMF is really all about, trying to encourage that resourcing. I think Saudi Arabia is also important on the geopolitical side of things. If you look at the US and Western supply chains, particularly in critical minerals and rare earths, we're going to have to reach out beyond our comfort zone. I think Saudi is a very interesting place, not primarily because of the resources it's got, but also because of the PIF, the Sovereign Wealth Fund, and its ability to invest in various elements of the supply chain. So Saudi Arabia is very well placed right now, and I think you can see that in the Future Minerals Forum today.
One of the critical things there, I would imagine, is, as you mentioned, the Saudi Sovereign Wealth Fund. Most people would say Saudi Arabia is sitting on all the money in the world. And one of the things that's perhaps holding back the development of critical minerals is a lack of finance for the exploration, the development and processing of those supply chains. To what extent do you think this event in Saudi Arabia can really help unlock some of these critical mineral supply chains?
Look, this is one of the challenges of our era, along with AI and life sciences. I think the critical mineral supply chains, McKinsey say we need something like $4 trillion worth extra investment in mining projects if we're going to meet our energy needs, let alone the green transition. It's a very concentrated market. So where is that resource going to come from? And I think you're going to see more public-private partnerships. Saudi's got a really good understanding of that because of the Public Investment Fund and its history, bluntly. So governments are going to need to cooperate with businesses more effectively if we're going to unlock that investment and the innovation that we need. But we're also going to see, I think, more friendshoring. It's been a bit of a buzzword. All eyes on the US with the new administration coming in. I think Saudi Arabia is very well placed to engage in that friendshoring, partly because it wants to upscale its refining and processing capabilities, and partly because of the PIF, the Public Investment Fund. But ultimately, what we've got to try and do is lock in the commercial dynamism of the private sector with a more concerted collaboration, which you mentioned, the Ministerial Forum yesterday. I think this is the start, not the end of it, but Saudi's got a very significant role to play.
You mentioned that China, in many critical minerals, China dominates 80%, give or take, of the supply chain or the production. How real is the East-West competition for critical minerals? Is it as much of a geopolitical threat as some people think it is? It's certainly a story that's making it into the mainstream media. Just this week, there was a story in the New York Post, of all things, running a headline, a front page story: China's iron grip on critical minerals puts the US in an unfathomable national security blind. Would you say that's true, or is that perhaps exaggerating what's going on?
I'm not sure about unfathomable. I think there's a huge challenge, and if we don't grapple with it now, I think it's going to get tougher. We're in the West, the US in particular, but its Western allies, probably 20 years behind China in planning those supply chains, and we're on catch up. And I think the US and Western companies want to make this a race to the top, not a race to the bottom, particularly in relation to things like environmental and sustainability standards around mining. But I also think we have some comparative advantages, dynamism, innovation. If I look at, for example, just one of the investments that Appian Capital makes, US Strategic Metals in the US, in Missouri. So we produce nickel and lithium, but also copper and cobalt. But one of the interesting next steps is the recycling of critical minerals, if we're going to meet the volume of demand you rightly set out. And through that US Strategic Minerals, we are recycling lithium-ion batteries, and the black mass feedstock then goes into the energy requirement process, part of the production. I think that recycling space is very interesting, beyond extraction, beyond processing, and I think you're going to see a lot more around that. Again, that's something the West, the US, Europeans, some of those Asian countries have got a comparative advantage. High-end, innovative, strong sustainability standards. And I think that's where we want the competition to go. Ultimately, though, the bottom line is, will the OEMs, will the manufacturing companies, the industrial players pay a premium for some of that extra high sustainability, high SG grade critical minerals? That remains to be seen.
I completely agree with you there. A lot has been said over the past year or so about the BRICS-US rivalry and the possibility of a BRICS currency to rival the US dollar, the end of US hegemony, the rise of China's hegemony. Recent months have seen some dramatic shifts in the political sphere with the election of Donald Trump, who takes office as the 47th president of the United States, next week? Justin Trudeau resigning in Canada, increasing polarization between China and the West, and now a recent story is the various African governments wanting higher rents from their resource sectors. And a host, of course, Saudi Arabia, seeking to be a central actor within all of this, as you mentioned. Where are we today, do you think, in terms of international relations?
Well, look, it's very fragmented. It's certainly not the certainties of the Cold War, although, frankly, Cold War, although we look back on it and think it was a period of relative stability, those two camps knew where they were. People were always very nervous about the risk of escalation nuclear war. So it wasn't entirely the land of milk and honey. I think there are more risks now, but I think there are also huge opportunities. The challenge for the US and the West is, can we collaborate with a bit more agility outside our natural comfort zone? If you look at the US, for example, rare earths, essential for defense applications, let alone the green transition, where are those rare earths going to come from? Something like 1% of rare earths production out of the US globally. So will they collaborate more with the likes of Brazil and Vietnam? The incoming administration is talking quite a lot about nuclear power. So they need more uranium. Again, US doesn't produce a lot of uranium. Will they collaborate with Australia, Canada, perhaps Namibia in that regard? I think the West is going to have to be more agile. in their public-private partnerships with investors, the state business dimension, if you like, but also in the other countries that they pull in. One thing is really clear. The US or the EU or any of those traditionally Western countries, you think of the NATO alliance, is not going to be able to fulfill the range and the depth and the volume of their critical minerals and rare earths needs alone. They're going to have to bring in from Latin America, Chile, Argentina, Brazil, from Asia, the Philippines. Indonesia's fascinating now with the change of president. I think big player in the whole Asian scene will be Saudi Arabia because of those critical areas of comparative advantage that we talked about.
Now, we mentioned previously, earlier in our conversation about the funding challenge to develop the critical minerals needed. One of the things that the mining exploration companies in Canada, the US, Australia, one of the things they lament is the length of time it takes to find, discover, permit, and bring a mine into production. 20 years is a figure often touted about. That would seem to be a real potential overhang on the ability to respond and generate the minerals that we need for energy transition, for defense, for power, for whatever. To what extent do you think, how can governments overcome those issues while still respecting their communities, protecting their environments?
Look, it's a big issue. If you look at the US, S&P Global had a report out which showed that on average it takes 29 years to get a mining project permitted in the US. That is the second longest, behind I think only one of the African states. I think it's Zambia. So look, permitting is a real challenge. I think that's something where the incoming administration of the US has set its sights. They've talked a lot about expediting permitting. That's something that I think could have bipartisan support. And actually, one of the things that I do on behalf of Appian Capital is chair a group of investors that advise US policymakers with a think tank called SAFE, Securing America's Future Energy. And one of the things that we've got in a report coming out tomorrow is a strong emphasis on expediting permitting. Of course, that can be done without shortcuts to ESG standards. Of course, it can be done in a way that's sustainable. But frankly, the levels and the extent of delays holding back the critical national infrastructure that is required to deliver those energy needs.
Now, Dominic, you've nicely preempted my next question. Appian Capital is going to be one of the biggest mining-focused private equity funds anywhere in the world. And Appian, together with the US government think tank, which you mentioned is SAFE, you're advising the regulatory, fiscal, and other aspects required for successful critical minerals development. The report you have coming out tomorrow, what are some of the key insights of that?
So Resources for Resources takes advantage of the insights, not just from policymakers and from experts in the field, but the investors who have pointed out in real practical commercial terms what it is that we need if we're going to see the quantum leap in supply of critical minerals and rare earths that Western supply chains need. I think there's a lot of talk about the incoming administration and the Trump administration. I think you're going to see a refocusing rather than a total reversal of previous policies because there is such bipartisan support for the strategic ends of de-risking from China and independent supply chains. But that's going to have to require a few things, and we talk about this in the report. I think it's going to have to require more agility and more firepower with some of the financial support that these projects, which are high capital cost, long-term risk. We're not going to see extra subsidies, but loan, tax credits, those are the sort of areas that we look at. Permitting, which we were just talking about, domestically, I think massive area focus, as it is in many other jurisdictions. Whenever I'm in Australia, Canada, or indeed in the UK, I think planning and permitting, expediting and streamlining whilst not losing environmental protections is going to be key. And then you've got this challenge of, well, what about the foreign policy side of things? I think Marco Rubio is a very interesting pick for Secretary of State. I knew him from my time as Foreign Secretary, very smart guy, very focused on de-risking from China, but also conscious about the agile combinations of clusters of relationships that we'll need, whether it's teaming up with other countries to provide the uranium for nuclear supply, or the rare earths that I talked about for defense applications. And then Jacob Hellberg as well, who is going to be doing the Undersecretary job at the State Department. Again, a China hawk, smart guy, worked at Palantir as an advisor. Again, he's going to be looking, I think, at some of these other agile relationships. So we won't necessarily see the same kind of internationalism as the Biden administration, but I think that America first won't mean America going it alone. And certainly there's an appetite for the kind of public-private partnership that we forged with SAFE and with US policymakers, and which this report is probably a good illustration of. But we're going to need to go further, we're going to need to go faster.
Is there a risk, Dominic, that the increasing polarization between the United States and China interrupts the ability to generate the partnerships necessary to develop critical minerals? Because under that kind of situation, looking back at the Cold War, you had, countries would basically face the choice of aligning with one bloc or the other. Saudi Arabia is obviously trying to play a middle ground, not necessarily trying to appease everybody, but it wants to do business with everybody that's open to do business. But in a polarizing world, the big powers are going to say, you're on our side, you're on their side. We saw this a little bit with the IRA Act that President Biden passed, where the FEOC became a very well-known insignia, the foreign entity of concern, who you do business with, and the people you do business with is increasingly under scrutiny. Could that potentially trip things up?
Look, the geopolitical fault lines are very clear, and that's partly because of the market concentration that you mentioned. I don't see it as a Cold War scenario, partly because the world is just not bipolar. It's not just two camps anymore. And that is because the rise, not just of China, but many other countries. India, like Saudi Arabia, wants to retain its optionality. If anything, you could say that their foreign policies reflect a sort of Palmerstonian foreign policy, where they have eternal interests, not eternal allies. The challenge for the West is, can we be more agile? Can we work with high trust partners on the issues that we need to provide that economic national security? Again, one of the things that we say in our report, Resources for Resources Tomorrow, is that the policy making could be more streamlined. Anyone that deals with governments, whether it's in the US or the UK, knows how difficult that interagency process is. One of the things we would like to see is critical minerals policy streamlined and accountable to the National Security Council, because it is now a national security issue. So there's lots to do, but actually I think with the smart, agile Secretary of State, which I think we'll have in Marco Rubio, as well as his wider team, and with a president who's known for liking deal making, I think there is also scope for opportunities here to provide the supply chains that not just the US, but their Western allies need, and to play to our comparative advantages. What we've got to avoid doing is trying to compete with the command economy on its own terms. I think that's essential to the challenge that the US and its allies face.
Now, we've spoken a lot about geopolitics, but you're a special advisor to Appian Capital. Presumably you're helping them tiptoe through all these various challenges as it seeks to position itself in various critical minerals projects. What is the advice you're giving to Michael Sherb and Appian?
Well, Michael Sherb is a pretty pioneering CEO, I have to say, both on the ESG standards, but also if you look at the terrain, the market terrain at the moment, we're not seeing a lot of extra supply coming from the majors, the major big mining companies. In fact, if you look since 2017, Appian Capital has invested and brought into production 12 mining projects. That is more than the 5 biggest mining companies combined. So I'd say Mike and the team are doing a pretty good job. Yep. And that's partly because internally they've got a 90-strong team of metallurgists, geologists, engineers who really understand how to create value. So my first advice is keep doing what you're doing. But what is clear, I think, to Michael and certainly to me, is that if we're going to try and deal with the supply chain security issue, there are 2 critical things: more public-private partnerships. So if you look at the relationship we have with the US and the advice that we provide with other private equity firms, the likes of EMR, Orion, Blue Vision, some of whom are here at this conference, what we're trying to do is say you need a commercial lens on these supply chain dilemmas. It's the first thing. The second thing is just we need the reality check of understanding that the US, Europe, even Canada and Australia, with all of their resources, we're not going to be able to do it alone. We need to branch out. That's why Saudi is important, India, Vietnam, important, and those other countries that I mentioned. So what is the agility in our foreign policy that we need? And I think you're going to see more and more governments coming and talking to investors about this. So as well as working with SAFE in the US, we're talking to our Canadian partners, we're talking to our Australian partners, And we're positioning ourselves in the years ahead, not just as the investor of choice when it comes to critical minerals, but also the advisor of choice to governments at how commercially to pull off the supply chain needs that they require.
Now, as mentioned, we have a new president in the United States next week. And I imagine for some people, there's a lot of apprehension about what he may or may not do. Other people are perhaps quite excited about what he may or may not do. What's your take on the direction he'll take?
I think you'll see a refocusing rather than a reversal of previous policies. If you look at just the point, and again, of Marco Rubio, when he was the author of the bipartisan Rubio-Warner bill, which talked about various things in the critical minerals sector that they need to do. So I think the strategic objectives actually are not that different. De-risking from China, providing supply chains to meet the energy needs of the United States and our allies, particularly if you think of EV, the green transition, and all of those sorts of things. So I think the strategic objectives are broadly similar. I think what will change is the toolbox of policies and economic tools that the US uses. Clearly, you're going to see less emphasis on subsidies, but loan guarantees, tax credits, and again, permitting reform, I think is something that you will maybe see quite bold reform. I think the interesting question then comes again with, well, de-risking is fine, but America can't do it alone. Which other allies do you work with? And I think a lot of people have criticized, or some of the critique of Donald Trump is too transactional. But I would see a great advantage in a deal-making agility in foreign policy to bring in some actors that perhaps the US has been chary about for too long. Saudi Arabia, I think relations cooled initially when the Biden administration came in. Probably the same with the Modi administration. I don't think Donald Trump will look at it that way. And again, you look at the Undersecretary of State designated, Jacob Hellberg, smart guy, he'll be looking very carefully. Who are the partners that we can trust, that we can work with business, with investors, to ramp up the supplies that we need? So I think it's going to be a very interesting time. There's always risk, right? But if you're an investor and you're looking for opportunities, that terrain I think is very interesting.
Donald Trump has said that he wants NATO to pull its weight a bit more. He doesn't want to be pretty much the sole contributor to NATO and the defense of Western Europe. Do you see him perhaps deploying a similar strategy in the critical minerals, saying, as you say, the United States cannot do it on its own. Its partner countries need to pull their weight as well in terms of presumably investing, developing policy, and the sort of bilateral, multilateral mechanisms for the financing and development of these resources.
Yes, although even more in the critical minerals space, the case for working together is there. With traditional allies, Canada and Australia, for example, with uranium for nuclear power. I think actually those things will bring them closer together. If you look then further afield at rare earths, I mentioned Vietnam and Brazil. Brazil's fascinating. We invest in Graphco, a graphite mine in Brazil. It is then processed in Urbix, processing mining project in Arizona. In the United States, but it feeds the North American EV market. That's a really good example of public-private partnership. It's just been given selected for $125 million grant by the Department of Energy. But it's also a good example of working with Brazil to try and secure those supply chains. And so I think my message, certainly as someone who's experienced in the foreign policy world, is those traditional allies are going to be very important. The Five Eyes, Australia, Canada, the UK, New Zealand, are going to be very important. But even together, even with the EU, we will not be able to shift the dial on critical minerals alone. So who do we bring in that can provide the volume, the security, and the range of critical minerals and rare earths we need, and not just for the green transition, but frankly for national security?
Well, let's finish on Appian Capital. What are some of Appian's goals this year? Where does Appian Capital want to be by the end of this year?
Well, look, I mentioned the success of the mid-cap, if you like, investments that we've made. I think that's where the real growth is going to be. We've done it through this in-house team of experts who look at the assets and see where can value be added. I think you can see more of that in the 12 months ahead. I think you're going to see loads of opportunity in those spaces that we've talked about. And we want to make sure with the new fund that we've got, the third fund, $2 billion roughly fund that we built out, that we're well placed to take advantage of the opportunities. And again, I think that these public-private partnerships that we're developing around the world, and not just with typical Western allies, but with others as well. We think that we're well placed to take advantage and buttress some of the headwinds, whether they are commercial or geopolitical. So I see a very positive, opportunity-filled year ahead for Appian Capital.
Well, I wish you the best of luck with that, Dominic. It's been a fascinating conversation.
Thank you.
Dominic Raab, thank you very much for joining us today.
Great to talk.
Stay tuned for more from the Future Minerals Forum with me, Paul Harris. And don't forget, if you like what you see, please hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
This is Kitco News special coverage of the Future Minerals Forum.